Hey everyone, welcome into the chat room with us. We're excited to have you joining us for tonight's webinar. It's a Monday evening and we finished a great day of trading. If you'd like to get in the chat room with us, we'd love for you to start a free 1-week trial with us. Head to our website there at kafinvesting.com and we can get you squared away. Tonight we're going to be talking about how to get your best possible entries in stocks, as well as the hottest pattern right now that's paying out the best for us. In the chat room, we've played it time and time again. It's been incredible. But before we get into all that, it's really important that we talk about the market health, some political news that is affecting the markets. To start things off, yesterday on Sunday, President Trump sent out a tweet directed towards the Iranian president, threatening him basically to not mess with the U.S. And you'll see right when he tweeted that, our market futures took a bit of a tumble. What are market futures? Market futures trade. They trade longer durations than the actual markets do and regular stocks do. And it's a way to kind of trade the sentiment of the market. So it's important for us to watch market futures because it gives us an idea of the kinds of markets we'll be dealing with in the coming days, or the next day in this case, because this was Sunday. And so we kind of knew we had to be a little bit careful heading into Monday because the markets were trading downwards. So always important to know what's happening on a political scale, important to see how they affect one another. Now, next up here, I want to talk about Google that released earnings after hours today. And I want to just kind of show and illustrate the effect that one single stock can have on the entire market. Here on the left side, we have Google, and you see the massive rip that Google had as they announced earnings. They moved from about 12.05 up to 12.75 nearly. And take a look at the market futures on the right side of the screen as well. That's our NASDAQ futures there. Massive rip from the NASDAQ futures in accordance with Google. And just really impressive action. So one stock, one news piece, things like that can really have a big toll on our overall market. So interesting stuff there. Now to talk a little bit more about that Google earnings release affected basically all the other major tech stocks in our stock markets. We have Amazon, Microsoft, and Netflix. Take a look at the runs that these had. Notice, let me go back real quick actually. So notice here on Google, this move that we got, get my laser pointer. This is when earnings was announced. This move from dark gray into light gray, that's light gray represents after hours, dark gray represents actual hours trading. So they released earnings just after the markets were closed, and look at that rip. So if we can kind of use that to compare here, Amazon, Microsoft, and Netflix all made the same, very similar move to the upside here on that rip and on that news. So it was really impressive stuff. How that spurs basically really the entire market. So I always talk about how the market runs in sectors, and there's sympathy plays. Well, right now tech stocks we're going to want to have on watch because right now these tech stocks are hot after the Google's earnings release. There was another sector that was running today that we traded. It was actually the toy maker sector. We traded Hasbro as a positive earnings winner, as well as Mattel, and they're a toy maker as well. So it's just an example of another sector that was running. So if an energy stock is running, you want to look at all energy stocks for potential plays. If biotech's running, then look at biotech sector. If a cancer-related stock's running, look at cancer-related stocks, etc. The market runs in sectors as sympathy plays to each other. So I want to talk about getting entries in stocks. I took a couple trades today, and I used 3 different buy orders to get into these trades, and I want to break them down, explain to you why I used 3 different buy orders. Why did I use a limit here? Why did I use a buy stop there and a buy stop limit over here? So I'm going to break this down for you a little bit. Some of this you probably will have a good understanding of how a limit order works, but this will be really beneficial so you can see why I use certain things in certain situations. So let's start off talking about the limit order here. Probably the order you're the most familiar with. The limit order allows you to pick the price that you enter the stock at. In this case, I traded HAS. This chart here on the bottom left of the screen, this is HAS. This was an earnings winner, and I'm actually going to talk a ton about how I trade earnings winners, the psychology behind it, the pattern. Excuse me, the pattern behind it, why I like to dip buy earnings, etc. So stay tuned. That's coming in about 2 or 3 minutes here. But this is I used a limit order. I always use a limit order when I'm dip buying a stock because I wait for the stock to pull down to the level that I want to buy it at. In this case, it was $100.84. Okay. Now, it requires more patience with the limit order because you're not going to get filled right away. You're not going to get filled immediately. You have to wait for a seller to come and agree to sell you shares at the price that you want to buy them at. Now, the advantage of this is that you choose the exact price that you enter the stock at. With some of these other options here, you don't choose the exact price, but they do have some purposes as well. So limit orders are used for dip buys. Now let's talk about buy stop orders here. Okay, I use this for plays over levels of resistance. Okay, this is TLRY here that we traded successfully today, and it was really an awesome trade. So I bought TLRY here over $31.85. Excuse my typo there. My apologies. But I bought this over $31.85, and if I'm ever waiting to buy over resistance level, notice that this is a 2-point level of resistance. It got denied twice here. See this? Boom, denied, came down, boom, denied. That's a 2-point level of resistance, and I wanted to buy this stock as it finally broke over that level of resistance. So I put in my buy stop order at 31.86, which is right above that level of resistance, meaning that once the stock finally moved over 31.85, that my buy order was going to get triggered and I was going to get into this stock. Okay? Now, the disadvantage of this is what we call market slippage. I'm going to explain market slippage here in just a second, but it's really important to understand how market slippage affects your trading. Okay? And I also mentioned volatility issues, and I'll explain what I mean by that. So my buy stop order was in here at 31.86, but notice where I got filled. I got filled at 31.97. If you're unfamiliar with that term filled, I'm going to explain that here in a second as well. So there was 12 cents of market slippage. I tried to get in at 31.86 area. I got filled at 31.97. So I guess technically 11 cents of market slippage there. Now, I'm going to explain why I used a buy stop here and how that differs from a buy stop limit. But let me first talk about this buy stop limit. I use this the same way I do a buy stop, but there's a contingency on it. Basically, a buy stop limit is going to be a mix between your limit order and your buy stop order, which is quite apparent in the name of the order, buy stop limit. So this is PAGS here that I bought over $27. Was another winning trade for us, was really awesome. I bought it over $27 though, but I wanted to use a buy stop limit order. Okay, and the reason why, again, is because I was worried about my potential fill. Okay, so the way a buy stop limit orders works is you put in your buy stop order in at 27.01, but you also gonna put a limit price in. In this case, I put it at 27.10. So that means that once the stock price hits 27.01, it's going to immediately start to buy whatever shares are available up until your limit price. So if I'm trying to buy 1,000 shares over $27 and the stock hits 27.01 and my order is triggered and it starts buying shares, but maybe there's only sellers are only willing to sell me 600 shares, between 27.01 and 27.10. Well, that means I only got filled 600 shares out of my 1,000 share order, okay? Because the price jumped further. That's the advantage of using a limit order, is that you can stop how high you get filled at. Now, the reason why I used a buy stop order over here in TLRY is because I just wanted to make sure I got in the stock. I wasn't very concerned with market slippage. And the reason for that is because this was a high volume, highly traded stock. There was tons of people trading this, tons of volume on the stock, so I wasn't overly concerned about liquidity. I felt confident that there would be a good amount of sellers above this level that I could get filled at, and that I was more concerned with making sure I got into this trade on the break over 31.85 than I was about market slippage and getting a bad fill. Now, there was 12 cents of market slippage. That's definitely not great. I'm obviously not really excited about that. But look at the move this ended up making. In this case, I was really happy I got filled, even though it did end up pulling back, and I technically could have gotten filled, at a lower price. But I didn't know it was going to pull back. I just knew that this was very likely going to make a run, and I wanted to make sure I got in, even if there was market slippage. Whereas over here on PAGS, well, volume was a lot lower. Okay, liquidity was a lot lower. Liquidity means you're basically how liquid the stock is, your ability to get in and out of the stock at the prices you want. Well, liquidity was a lot lower, and I was worried that if my buy triggered over $27, I might get filled somewhere crazy, like $27.40 or something, because volume was so low. So instead, I wanted to protect myself and use a buy stop limit. Now, all three of these ended up being winning trades, and they were awesome, but I just want to illustrate there the difference of those three orders. Now, let me talk about terminology here for a second. I might have said some things that you were unfamiliar with. So what is the spread? The spread of a stock is going to represent the difference of the bid and the ask. Well, you might be wondering, what's the bid and the ask? This box I have here is the level 2s of a stock. Okay, the level 2s are really important. I have a video about reading level 2s, and I strongly encourage you to watch it if you haven't. But level 2s, here where it says bid, This represents all the people who are trying to buy this stock. This is an example of Apple stock, okay? So you'll see here 191.84, someone is trying to buy 500 shares here. Meanwhile, the sellers represent the ask column. Someone's trying to sell 800 shares at $192. So this is kind of the offer here from both the bidders and the sellers. Now the difference in between the two represents the spread. In this case, there's a 16-cent spread. Now why is that important to know? Well, the spreadier a stock is, the less likely you want to be to trade it. Because if a stock has a really big spread, then that likely means that liquidity is going to be an issue and market slippage is going to be a major issue. Okay, market slippage is the difference that you're trying to get in a stock and the price your order actually gets filled. So to go back here, market slippage represents, in this case, 11 cents. I tried to get in at 31.86, but the market slipped and I couldn't get filled till 31.97. That's what we call market slippage. And market slippage can have a huge effect on your trading and profitability. So that's why you want to use a buy stop limit order to help prevent market slippage at times. Now what does fill mean? A fill simply, it just means the price that your buy or sell officially got executed at. So in this case, my order was in for 31.86, but I didn't get filled till 31.97. So that's market slippage, and that is the fill there. Now I want to talk a little bit about my trades today, and I really want to get into this dip buy of the earnings winner that I had here with HAS because it was incredible. Really good day for me trading. My only losing trade was CLF, and it's kind of funny because I sold CLF right before the closing bell, and it's now way above $11 in my entry price in after hours. So this was my only losing trade, but it actually really could have been a winning trade had I swung it. So awesome day for me today. I'm very pleased with today's action. Now let's dive into HAS and talk about what I saw from this and what is the psychology behind these dip buys. Why do people like dip buying earnings winners? Why do I like dip buying earnings winners so much? Well, here's kind of the breakdown why. Okay, this is HAS, this is Hasbro. Earnings winner, big gap up from about $90, and this is where it opened right here at market at 105. Okay, so let's think about the psychology behind people who own this stock. Let's say you've owned this stock as a long-term investor for 6 months, a year, 2 years, 3 years, whatever it is, and you're looking to maybe move your money elsewhere, or you're looking to take profits, on the next pop over $100, whatever it may be. If you own the stock in your long-term portfolio, you're obviously very bullish on the stock. You think it's going to go up. So when it does go up, at some point you're going to take profits, and a lot of people will use post-earning wins to do that, to go ahead and take those profits. So that's why it's so common to see this sell-off at the open once a stock has released positive earnings. See this sell-off from 105 down to $100, that's the sell-off, okay? So if you're a long-term investor, you actually are going to probably start to kind of panic. Market opens, you're happy, oh, this is great. I'm up, 20% today on my long-term position in HAS. This is awesome. Oh, shoot. Why is it selling off? Okay, it's down $1. Oh, it's down $2. It's down $3. Okay, I'm just going to lock in profits and be done with it. Okay, so people will kind of actually panic sell during typically these first moments of market open. But as a day trader, that's where we sneak in and look for the most opportune dip buy opportunities, because we are looking at this totally differently than they are. We're looking at this from a short-term perspective. This company just released great earnings. We have tons of people taking profits. Well, let's go ahead and dip buy. Let's dip buy other people's fear and play the retrace on this. Now, obviously, it's not 100% for sure thing, and you always want to have a stop loss in just in case. But this strategy, if you can time your entry well enough, and I'm going to talk about that in a second, has paid off incredibly. So up here at the top, here's some things that we need to consider and things I look for as I trade these. The first thing obviously is that it's an earnings winner. Okay, that's the catalyst behind the stock. What does that mean? What does catalyst mean? A catalyst is anything that makes a stock move to the upside or to the downside. If the company declares bankruptcy, that's probably a bad negative catalyst. If the company releases positive earnings like HAS, that's a positive catalyst. There's lots of different catalysts, and you always want to know what the catalyst behind the stock you're trading is. Why is it moving? What news is moving this? What did the company do recently? It's so important to have a good understanding of your catalyst. Some catalysts you want to be sure to play, and other catalysts you want to avoid at all cost. Okay, earnings winners, dip buying earnings winners, the catalyst has been incredible this earnings season. So next up, of course, it's the dip buy. Let's say that this stock opened up and it just took off right out of the gate. It's pretty unlikely that I would chase it to the upside. Now it may present a good opportunity, but most likely I would avoid chasing it. I wait for the dip, and if the dip doesn't come, I don't chase it. Okay, being patient for that dip is so important. Okay, next up I mentioned buying and profit taking. Well, this is where we can talk about our entries for a second. Now, why did I have my buy in here at $100.84? Well, in short, okay, there's a lot that goes into this, and I talk about finding, good entries and support levels and things like that in a lot of my videos. But in short, I bought this based off of the natural level of support at $100. Okay, at $100, you will find support no matter what stock you're trading. Okay, it's called a natural level of support, and it's very important that you keep that in mind. All right. It can also be a natural level of resistance. If a stock is moving towards that, it can also be a level of resistance. So in this case here, with HAS, I wanted to buy this just above that support level because I felt that there was a very good chance that this stock would use the $100 levels as support as we retrace to the upside. Now notice up here I mentioned room to average down. Okay, this is also really important. I promise you I will not predict the bottom of every stock, the bottom of every dip. There's no way. So instead what I do, I typically will take my buy and split it up into two buys. So if I want to buy $10,000 of the stock, that means my first buy is going to be $5,000 here at this level, and then my second buy will be lower to average down. Okay, now that doesn't mean you just keep buying, averaging down. You definitely don't do that. I had a stop on this. I had a full trade plan. I said I wanted to buy at 184 and average down at 99.25 with the hard stop at, I can't remember exactly where it was now, but you always want to have a plan, okay? Even if it's a perfect setup, it can still fail on you, right? HAS could have failed on me. I could have gotten failed at 184 and it could have kept falling down. It would have been stopped out. I would have moved on. That happens in trading. That'll happen all the time. You always want to have that hard stop. So with HAS here, though, I bought my initial entry here just off of this natural level of support, and look at the retrace we got. And the next thing, the most important thing I want to talk about is patience on the retrace. I am so bad at this. I love taking my profits early. I'm pretty sure I took my profits here in this 103 or 104 area. I can't even remember yet. I don't know. We can go look at my trades. I'll tell you exactly where I took profit. 102.84. So I took $2 a share exactly on this trade. I took profits right here. But look, it ended up hitting 107. So this was an example of when I was not nearly patient enough. I would say that's my biggest weakness of it as a trader, not being patient enough and letting my winners run a little bit more. But of course, I'm always working on it. So this is the earnings winner play that has been paying time and time again. Look for earnings winners. Look for the profit taking out of the bell, and then look for levels of support where you can slowly enter into the stock with 1, 2, maybe even 3 buys, slowly averaging your way into there. Okay, so that's HAS and the earnings winner buy. So hopefully this is helpful. Real quick, I want to talk about a giveaway we're doing. I want to give away a free month into our chat room with us and a t-shirt. So please join us. You can get in on the challenge. You can get involved either through Twitter, Instagram, or Facebook. Facebook, you need to like the post. I can't remember, but go to my Facebook page. You'll see the rules there. Same with Twitter. You'll see the tweet there, and Instagram. You'll see the post there. We'd love to get you involved. Get a free month in the chat room and a free t-shirt. And that's in addition to a free 1-week trial with us as well. If you are already a member and you just want some cash, then I'll pay you $100 cash straight up instead. So be sure to check that out. We'd love to have you, get involved and join us. So thank you for joining me for tonight's webinar. It's always a pleasure to trade with you all. I'm excited for the week ahead. Hopefully this is helpful to, help give an example of some things that I'm doing on a day-to-day basis to trade profitably. That's the whole goal, is for us all to trade profitably. And so I sincerely hope that this is helpful. So looking forward to trading with you guys. Best of luck, and I'll see you in the morning.